Great and beautiful morning and evening to you all, wherever you are joining me at this moment. Welcome to 509 edition of InvestData Trading Academy Live with Ambrose. I would say that the global market continuing in the oscillation mode that we saw on Monday and yesterday, Tuesday. And that tells you that as the month is winding down, I've seen a lot of us to settle rotation and also investors and also policymakers looking at the impact of tariff, despite there's a kind of easing in some sectors or some pronunciation. I will tell you that the tariff has not really given the global economy and also the sentiment so far a clear direction. There are still some speculation of whether they should start looking away, or also they start expecting to see that the negotiation also bring a solution to this issue. But the good thing is that in any market where you're playing, you are playing, we have seen that investors are taking advantage of the market oscillation and also the mixed numbers that are common in some domain. Why some some country or a market experiencing impressive number. When I mean impressive, healthy corporate actions are hitting the market, and also the numbers are also pointing where this current financial year for those companies are heading to, and that's also guiding investors to make what informed decision as to speak. And that is why in any market you are playing or where you are investing, you need to understand the fundamental in that environment and also the technical perspective, looking at what is the demand and supply, what's the money flow like, and also what is the market fundamental, and also at that same time the sentiment prevailing. And that is why we want to look at what is happening in Asia market, to start our discussion this morning. And I'll tell you that in Asia market, most of the stocks or the market there are mixed, and as a result of what we are seeing that the mixed figure that is coming from mixed macroeconomic data as emanating from China is also a kind of a pullback or kind of a setback. Let me use that one. And also in Japan, these are the things that's going on the market as we speak now. As we speak, we're seeing a kind of a little pullback in the Asia market, a sort of investor digesting, different economic data or that are being released to the market. Particularly looking at the what I call the manufacturing sector, or PMI, what we call it there, purchasing manager index of these companies. These are the things also we expect to see and to give us a clear. But looking at activities for China, we're seeing a slowdown in terms of factory activities, export activities, that's manufacturing activities in Japan and that of of China. But eyes are still on also the inflation figure that's also being released from Australia. These are the things that also is affecting activities in that environment. Indian stock market as we speak now has edged lower as a result of rising the political tension with Pakistan and also South Korea. Also stocks are also in red as also as a heightened political unrest in that you know nation as we speak. But I believe that these numbers that I was saying of kind of activities or sentiment is also as a lot of investors also putting their eyes on what is happening in terms of tariffs. Trump has also slammed China with another tariff. Don't forget that was going front and back on it because when I mean Trump tariff stamp on China was that they export record or data or activities for China has also slowed down as a result of this escalating US tariff under Trump. It's not really favoring China as to speak. That's why they were seeing a pullback in their purchasing manager index to 49 point against expected 50.5% basic point, and that shows that as a contraction or kind of in their factory activities. And for me, this decline is the first one since December 2023. Also you can see that impact of this tariff is also reflecting on the China economic as we speak. These are the things we also need to note in that environment. We also seeing that but if you look at all this, we see that Shanghai composite, is flat, while the Shanghai 300 also unchanged. Hong Kong index is the one that edge higher as we speak now because of also investor taking advantage of it. Like I said, that Japan and China economic data are really mixed. That's why we're seeing a drop. Surprising that we're seeing that Japan, industrial figure or report was saying that it was a kind of a expected to hit drop to 0.5% down in that region. This reduction also shows the part of rate hike in that environment, and also they tariff on some of the goods, manufactured from Japan. We're not surprised, but all eyes are still, like I said, that with this, Australia inflation figure that grew slightly, more than slightly more than expected, but not as a, for me, it's likely, kind of giving an opportunity for the Reserve Bank of Australia to cut rate. But I think all eyes will see where they are heading to. I mentioned earlier that the India market is down because of the geopolitical. Also the Nifty 50 also is down 0.2. These are the states of Asia market as we speak. But if you look at what is happening in Europe, now I'll tell you that Europe, you can see that stocks in Europe market are edging up at this hour, despite as volatility, for end of the month is also there. But the stock, edge higher for me, and also all eyes are on earnings in that market. But we expect to see more numbers being released in that market. But good news that we are seeing that most of the index in that environment is also, picking up. And don't forget that the new government is also taking over also government any moment from now after the Conservative Party and Social Democratic have come together, I believe that they have a lot of challenges, but I tell you, new government will come with new policies and new direction. That is all eyes and stay. But to mean that Germany is the biggest economy in that zone, I think the direction of leadership there will also have a way of pointing to right. But also the ECB there is also planning to cut rate. Let's wait and see. But good thing that the market there as we speak now is in green in that zone. I think that most of stock there are heading up. If you look at the German index up by 0.7. So today also seeing that France also is gaining 0.2 and the UK is also up by this. For me, as more eyes are on more for I told you earlier, quarterly earnings are hitting the number. Even before now, the ones that hit the number, they hit the market, they are also green. And that was in a straight, a straight 6 positive recession on Tuesday. Let's see what Tuesday is going to end. But that's extending to already. We are seeing more winners as the market is going already, and that has been since January. This despite the turbulence in this April, as that the cloud market also drawing to an end. That means April will soon go out for to see what they may have for the market globally and also domestically. But I believe that with these all eyes on the corporate earnings in Europe zone, I believe that numbers will determine where the market will go. More companies expect to release results from Europe, and this also will be a counter. Mercedes, Simtel, and all these are big, Volkswagen company in Germany also expect to release results. Their earnings also determine where the market will swing to. But already, as we speak now, we are seeing a positive market. Eurozone growth also data that also one of the things that also looking at. Despite you are seeing expansion in this, but I believe we are going to the future. Let's see how the trade war are also going to affect their expansion. Good news, we are seeing a really positive hit in the GDP for the first quarter. But let's see how it's going to sustain with a good form. Let's see how it's going to be. For me, I think it's a good start for Eurozone. But because of this tariff, let's say that will be a little step back. But let's keep all eyes are still on US GDP data and other inflation figures, ahead of Friday, key payroll, report. But nevertheless, good that yes, we are seeing other accumulator from China, from Japan, and a lot of Eurozone. Let's see how it's going to go. But finally, let's look at the US market, go for African market where we play. US market right now to speak also is heading lower slightly ahead of what mega tech earnings that expected to give direction, and also some important US data. This week I tell you as from Friday tomorrow, we're going to see more of these figures, and that will also guide investors on what to do. Investors are keeping tab on all this data, trying to guide them to know how to flow and where they look at if the economy of US is it growing, is it contracting, inflation figure is it pointing for another rate cut or hike, even when President Trump is also giving a sign that yes, that the Fed should cut rate. Want to see also easing on the blow of tariff on automobile reducing also. For me, let's see how it plays. I think White House is also waiting to see the 100 days in office of Trump, where Trump are proving that he want to also within 24 hours when he was campaigning that he put an end to Ukraine and Russia war. Today but that negotiation is still there. Even when it is stop, we don't know where they are heading. Let's see. Like I said earlier, that all the indices in the US at this point, particularly their market indices, to speak Wednesday, in a slight red, at four eyes on more corporate earnings also, and fresh development from around the Trump administration on this trade policy also will guide investors on what to do. But I believe that investors are not really sleeping; they are taking time to read all the direction, all the sentiment, all the government policy direction to guide them to make decisions. And Trump is on what on the auto tariff. Is that going to impact life of Mercedes, Volkswagen, Toyota? I want to see all this playing out. Like also all those electric cars, how it's going to improve in that industry in America. Wait and see at the end of the day. But I believe that most investors are looking at to see more earnings that will guide them to know because the company performance is very important and also as the market fundamental or sentiment are very very crucial at this point. Even as all eyes on US data, economic data, I believe that also we are seeing that crude oil price also looking southward at this hour, falling on them, on kind of concern over tariff, which also have put a kind of also prepare planning to increase also to hike the output. These are things that win on the oil market or call it a commodity market. But I believe that the market is set to close largely in red for the month of April, and that will be like 3 times in for more than 3 years in that kind of drop. And that says that this global trade war is also really hitting demand forecast or demand growth forecast for the crude oil. But I believe that it's going to hit more of those that are going to producers that depend on it as income. Why the price drop is a plus for economy that use it to run their business. But let's see how this is going to play out and keep the global economy, in this gradual recovery. Even when we're seeing a lot of downgrade in terms of forecast for the global economy and some part of the Africa, different reports are coming. These are to guide investors on what to do. For me, there's no cause for alarm. If you come to African market is also not different from what we are seeing in the mature market. We are seeing a mixed market. Already now we are seeing that the NGS here in Nigeria is extending the kind of pullback we saw yesterday on profit taking. And that's why we are seeing the market is also missed in terms of performance, but we are seeing that stocks are looking down. But in terms of price, that's why they are weighing on the index. If you look at index right now, you can see that this index is down. You can see if you have put loan aside right before this hour, there's comes on back. So sellers have put the market down before now, but buyers have pushed it. Or that's why we are seeing this long wing here. Even yesterday, when the buyer pushed the market, buyer pushed market, but seller pushed it down again yesterday. That's why you saw this. But this morning also, we are seeing this kind of candlestick when market is going down. It's a sign the market is on that way. But let's wait and see. Being that today is the last day before the holiday, knowing that tomorrow, so let's see how the market is going to close. But if you look at the general market condition, we are seeing a heavy market as we speak right away. But let's quickly look at the market data now. Market data, we are seeing that the market is currently doing 105,806.60, and market is also marginally in red, down by almost 72.84, down around 0.05 as we speak now. But I believe that the market has potential to rebound, but the volume period so far is small. But if you look at market bread remain positive, we're having 27 advances and 20 decliner at this hour. And it also informed that the market is also investors are still taking advantage of what is happening in the market right away. And for me, it's a good one for us to watch. But we are seeing more earnings coming, and these earnings are not doing badly, especially from the financial sector. We have seen the one that came from the consumer goods. All these numbers are pointing to where this company are set, for the year. All eyes are still on government policy, both CBN to see how this policy will also support the expected expansion we have seen in Q1 going into the current financial year. Like I mentioned earlier, we are seeing that the top gainer right now is Vital Food, followed by University Press. We are seeing still analyzing also on the top gainers. We are seeing MC, Nico, and Linkage Assurance. These are the top 5 gainers right away. On the loser chart, we are not surprised that profit taking have hit the international brewery after the rally on the result release, and that of also Keja Hotel. We are seeing also Austin Lad also among the losers. I've seen the Legend is down by 9%, trading around 7.50 away, right away. And they were seeing Predators Capital also. These are the top 5 losers as we speak now in the market. Quick one, we're looking at the top picks for today. We're looking at talking numbers on the those financials from first Holdco and Wema Bank. We're talking about Unilever and UPDC. Want to look at this figure after this, we can quickly look at if time permits us to see what the chart is saying. Quick one, we'll start from UPDC. Let's start from here. I'll tell you that this figure from UPDC is really outstanding for their Q1 for 2025. If you look at this figure here, it tells you that this company moving from if you look at the number released so far, looking at the top line and the bottom line, yes, they are all in green, and even at 2 digits, more than 2 digits, it tells you that this company is not so doing badly at all. Investors must pay attention to this kind of company, especially as we are seeing that the industrial goods that is wet industry, you can see the kind of number posted. We're also waiting to see that of the lot better. But tell you that because of the infrastructure problem we're having in Nigeria, this company has positioned itself. I'll tell you that under UPDC, a lot of companies like the holding company is also emanating, and that is also to boost their performance. For me, investors should pay attention to this kind of company. That as our government is applying to make sure that the $1 trillion economy that they want also use real estate also to be part of what will make up that content. That means you must pay attention to that. That's why UPDC is a stock that you must put attention at this time. Knowing that yes, we are seeing their role trying to provide low costing for housing for retirees and things like for Nigerians, and that also further boost their performance. As I said, you must pay attention to this kind of figure. For me, it's a good one at any given time that you pay attention to it. That it will help you to make what buy into local stock. Yes, their price can double easily, and that also. If you look at the top line, like I said, they move from 1.3 billion to 2.2 billion. You can see the margin. This is about almost 70%. Or 68, 69%. For me, it's a good one for the company. And at the end of the day, you can see also that the selling and distribution cost, you can see also the weight was also up. But at the end of the day, cost of sale, you can see that it's also up. But finally, where you and I is very interested, especially this Q1 number, is to see that cost of finance, you can see that it's also up. But also you can see that also there's a financial income or finance income. You can see it here also almost more than double. But at the end of the day, we are interested to see what is the tax commitment. Therefore, you can see that for tax, you can see more than from 24.5 million to 222.82 million. That is this more than almost 500% up. You can see also the bottom line, which is what every investor is looking at. I think from 59.15 million to 481.74 million. This represents about 714 or 715% up. For me, it's a good one. It's a signal where the company is going, and they're paying £1. As I said earlier, in one of my comments, that this £1 is just to tell you that they are part of any price oscillation you are seeing that stock now. Just know that you are buying at the right price, and wait. The more they reach positive number, the more the price also will move over. I think they are bright feed on this earnings, and also because of the nature of their business that's still just changing now, I see a lot of activities around that company. And also, because when a company is going top line and bottom line, it's a sign of what a good business for them. That is actually most important. Yes, you might say that they're having a 3 kobo earning per share. Yes, it's a good one. They are coming back to profit, and it's also heading the issue of share standing of about 18 billion. For me, it's a good one. They are coming back. The more they release the important number, the more price feed on it. Their balance sheet is also robust as we speak. But what I'm doing now, I'm going to show you where you also pay attention, not the cash flow here. Pay attention at this point. And look at the equities, as we can see that the retained earnings is also negative, but it's dropping from 9.15 billion to 8.8. You can see that is it. I mean, if the more they make profit, the more the net, and also the net assets also you can see also the marginal drop on that, like also on their what on the current liabilities also drop, which for me is also a good one. But the good thing is that take their what their cash flow of operation. This is very very important, and also you should also pay attention. The cash flow operation is also where you also look at. But consider the cash flow operation. What I am letting you know, also you need to understand everything that is happening in the business where you are putting your money, so that at the end of the day you understand the cash flow is negative here. The net cash flow here you can see it here negative, but this is something like when it continue. But because we are seeing that the profit is going up, but we want to wait at cash flow is also dropping from increasing from a negative of this to this 4 and something million to 5. We want to wait to see what will also look like in their next result. Before we go to the financials, let's also look at it quickly on the Unilever. We have seen numbers from this industry of consumer goods are standing, and Unilever also in that direction. You can see a movement from about 300 32.32 billion to 46.98 billion. For me, it's a good one also for the company. At the end of the day, look at this company is one of the best companies in the industry that even when others were posting FS loss and all those times, we are seeing that this company was not giving us all those ones. At the end of the day, they able to sustain their price. Dividend of 120 kobo, while others, most of them are struggling to pay dividend because of their negative position. Consistently, this company, it tells you how well this company is standing, but pay attention to these numbers. They are very, very important. You can see that the operating profit here is about from 3.84 to about 8.27. And at the end of the day, you can see that yes, the financial cost dropped significantly. That also impacted the performance of the company for the quarter. You can see from about 1 point something billion to 172 point. You have to take care of that. Also, you can see that increase in the financial income at the end of the day. But what matters for us is what is their profit after tax from 3.36 billion to 5.55 billion. For me, it's a good one. Any per that move from 58 kobo to almost 1 naira, let's put it there. Now, one thing that you want to pay attention also, looking at what the balance sheet of this company is very, very important. You need to also go there and see what is their equity making, and also what is their total assets. Total assets continue to also to look up. You can see from 141 to 155. For me, it's a good one also at the end of the day. But let's also look at the equity component of the company. You can see that the retained earnings of this company that have supported dividend also from 25 point something billion to 30.97 billion. This is a good one for them, and that is why we are seeing a consistent dividend payout from this company all this year. Even when others in the industry are struggling and putting negative numbers, this company continues to reward their shareholder. And good, you look at their operating cash flow for the period under review. For the first quarter of the year, 90 days, you can see negative 16 point something billion to 9.67, 9.57 billion. For me, it's a good one also that we should also look at. But finally, we want to look at what is happening in the financial sector. We are seeing results that have keep investors looking up, because we are seeing results that came from UPDC, the one that came from from Stanbic, now another one from Wema Bank, and also from from First Holdco. These are the numbers that investors should not look away. You need to look at these numbers because you need to point out something that is happening there. And you can see that let's quickly start from which one is from the First Holdco. This is one of the oldest bank in Nigeria, but you want to look at the numbers. Does it point to at the oldest, or is the number missed at this hour? You need to also look at all this. It's very, very important for us to pay attention to. If you look at the interest income from this company, also I think that here their top line was up. I will tell you that. But for a company that has that kind of impressive top line, and also we are seeing that the profit after tax also was seeing a decline for the period, investors also pay attention to that. It's very, very important that you look at such numbers, because it will help you to make what informed investment decision as a trader or investor. When you're able to understand this flat number, you're able to plan where are you putting your tents. We have seen that yes, the payout in terms of dividend has not been so attractive for investors, and we are seeing a declining first quarter figure. You need to ask yourself a question: what is there. And it tells you that yes, they and when they paid a lower dividend, will ask the question. But that means the regulators have seen all this before they will not allow them to pay a bigger, compared to others, new generation bank that have gone big now. You can see that other banks are paying 4 naira, 2 naira, for a big bank like FBN holding with a lot of holding companies under it, kind of right, paying 60 kobo is a sign, and that also reflects on this good company result in Q1. And that's for those that are positioned there. You're only positioned for with momentum, but in terms of fundamental of the bank, I see that they're having a mixed number as we speak. Yes, the top line is in green, but they were seeing a decline, and as a result of what increase their provision of provision for loan loss fine, and at the same time also for increase in cost. These are what are weighed back now on this bank. You need to also monitor all this to see if there is a reversal in this, that at the end of the day you also know whether it's a place for you to pitch your tent, as you are seeing this figure for the first quarter of the year. Others in the industry are seeing a better number in their EPS, in their dividend payout, but this no company, this Gold is not giving us that same clue as we speak. Even when you look at the balance sheet remain robust, fine, I will tell you that one, the balance sheet is still okay and good, but on the what matters is what is the reward for shareholders and how solid is the bank. And for them to be paying 60 kobo, that there are some some like the indicator of quality that the CBN the regulators are looking at. If those indicators are not properly as expected, they will not allow them to pay the dividend. That's you as a trader investor, you should know why you are entering the bank now or the good company. Is it for capital appreciation? Oh, now there are right issues, the corporate have really listed it. Fine. No, have they met the 500 billion? You need to find all this and see what you can do with this company. If not, there are other companies that are coming up powerfully that can create wealth for you, and you have to think twice holding this company for a long time. But I believe that it depends on your investment objective. Their balance sheet is very strong, and also their cash flow is not so bad at all. If you look at their operating cash flow, like I don't joke with it, it's very, very important to look at it. I tell you that when you see banking, industry with a negative operation, you should not panic because of the nature of their product, of their services. Sorry, you can also see it here. Look at the period over about 20 trillion. Let's also wait and see, because this for the first quarter of the year. You must pay attention to all this. They are very, very important to every analysis we are doing before we take your buy position at any given time, because this will be a long way to guide you in your decision. That's why you must pay attention to them. Finally, we're going to look at one of the second, or the second tier bank that is coming up powerfully. We saw how Fidelity kind of transfers from second tier to almost entering the first tier now. That have kind of surpassed activities they were seeing in even Stanbic. All of them were second tier, even the same Wema Bank. Now we're going to see the result that came from Wema Bank yesterday. I'll tell you that this number is also pointing to where this bank is going, and also I'll tell you that this is one of the bank for the western region, and I tell you this bank is really pointing to that value is there. And I'll tell you that since private equity entered this bank about 5 years ago, you can see that they really helped in turning this bank around, and that the figure is also pointing to that you must pay attention to this figure to see where this bank is going. This bank performance tells you that this bank is already becoming a bigger bank that you should not joke with. I mean, identify with this bank at this time. It's a good one for investors that are smart and that are also looking at where they are going. The more a company is putting a better number, the more price will respond to it, whether on the short run or on the long run. Right, you must pay attention to all these figures you are seeing in this first quarter. Looking at this company top line, start with what interest income. You can see here, the gross earning. You can see what you can see for this one from the compared 2024, 81.27 billion to 100, and that you can see the percentage change here. Then you can see this about about 72% up from the growth. You can see, you can easily focus. This is what they had in 2024. If you put it in the first quarter, if you turn this figure to consider, it has surpassed already this one, tells you where the bank is heading for the current financial year. If you go down and look at the interest income, was up. You can see it here. Compared to this, it's a good one. I'll tell you that the alert, product for that bank is also making really income for them, and also their strategic investment also is not. I believe that is a place most investors that are looking for value or growth stock also should look at. This company is a growth stock that is even paying dividend. That is another beauty of this company. I think today or Monday or Friday they mark down for the 1 naira dividend. You can take advantage to qualify, or you want to wait for market. But I think there is value in this stock. We saw how Fidelity moved from as low as one thing that got they are almost the same sequential banks that are now metamorphosing from that sequential expanding toward. And I believe that there's also potential that this bank can also swallow some banks in Nigeria in terms of merger. If that happens, that will further boost these numbers we are seeing. That means it's a place for the future, for we are taking long. Then you also go around and see the net impairment loss for the can see is almost flat compared to the previous year, the first quarter. You can see it here. It shows how prudent the bank is in terms of also loan they are giving. Don't forget that in a high rate environment like we are in Nigeria, most of the banks are struggling with what with bad loans because many people are defaulting because of the nature of the economy and also what. But I believe that if there's a kind of a rate cut, that will also help this bank to recover most of their provision for bad loan. And don't forget that when they start recovering this way, these bad loans will also become a profit for them at the end of the day. Also, pay attention to other incomes from this bank. You can see that it has also jumped. Interest fees and income also have jumped from 10 billion point 8 to almost 25. You pay attention to all these figures. They are very, very important for us as we are looking at the figure right away. But that is the only way you can do your work successful comparison on this bank. But one that is very interesting is looking at what the bottom line, which is the profit for the period. That profit we can see that how it moved from 9.67 billion to 35.81. You can see this figure is really outstanding. I can see it also reflected also on their EPS for the period, and that tells you that there's a lot of things investor can also get from this. You can see that on this EPS, if you divide this EPS by 100, this EPS divided by 100, you can see that about 3 naira to 8 naira. Let's see and see what is going to happen at the end of the day to see the figure we are seeing. And don't forget that they've not listed their research issues still on. It will also further diluted. But I believe because of the expansion in their business, even when they increase their share issue, we are likely to see a better also EPS that will support their pay. They are paying 1 naira, that's for 2024, that's 100% growth for 50 they pay in 2023. If that trend continues, as their earnings increases and they are increasing their payout, that will continue to impact the price positively as we look at it. That's the way it should go. If you look at the assets, the balance sheet of this bank is powerful also. For me, you can see it now for yourself. Look at the asset base of the bank from 33.9 to about 6.61. This also in green. And if you look at also the retained earnings of the company, it also has improved, or the bank, sorry, from 103 point. This is also a good one for the current financial year quarter that just ended, and that's important to where the company is going for this current financial year. You must pay attention. And if you look at this now, if you look at this, it's also for only the first quarter 2025 compared to what they see for a whole year. It tells you that yes, this is a trend that you look at. This for only the first quarter, we are seeing this record. This for a full year 2024 tells that at the end of the day, where will you see this bank? Then it's good and come back to what so their retained earnings for the first quarter alone is higher than a lot of what they have for the whole financial year 2024. I believe that this is a content that we should expect more from this company. Let's quickly look at the company's. Our time is fast spent. I won't lie. You. Quickly, let's look at this. The cash flow is very, very important. It's where we also look at what the cash flow from. And I tell you that when you see cash flow of bounce on negative, not panic, but when it's on the negative, don't panic because of the nature of that. But for Wema Bank, their net cash from operation is in green. You can see this for the whole year 2024, 300 and 111.69. That is also already in billion against the 200 and something. Also in billion. For me, I believe that this 66.8 is a good one for the bank in the first quarter of 2025. On this note, I will say thank you. But before finally, let's quickly go back to our chart to see if the market has taken. The chart is also telling that market should little decline. If that trend continue on Friday, meaning that tomorrow is a holiday and today is the last trading day of the month. But to see that yes, the month of April has also still ending almost flat at the end of the day. You need to pay attention to that. That April ended almost flat. If you look at where April started, let's say down here, April started at this point here, is where you can see, April, the month of April. April started from almost here. Yeah, it's April now. Let's put it there. April will likely close on marginally flat or marginally up or flat. But let's wait and see. But to speak now, market is resisting to go further down because of positive number we're seeing. Let's keep our finger crossed. On this note, I will say thank you and see you on Friday by God grace. Enjoy your trading for the day. Bye.